primarily in China, Sri Lanka. We've done stuff in Portugal and in Korea. And Korea was an amazing place for us for a really long time. We had the benefit of importing for Korea actually duty-free for a very long amount of time, as long as the componentry and the raw materials were made in Korea.
How much of a cost exposure or potential increase are we talking about? And can you give us examples of some of your products?
Yeah, I mean, the last 10 days we've been on the edge of our seats, I mean, truly. So, I had a product that was supposed to leave the factory at $38 cost of goods when we would have landed it. And, maybe in January, it would have been a $47, giving me a $180 retail. Right now, it's landing at $111 and a $400 retail. And that's just not sustainable for any consumer.
So, meaning because the cost went up significantly,
yeah.
But you're trying to raise the price even more in order to kind of keep the margin and make it all...
Yeah, I mean, I don't think any other small business has any other opportunity other than kind of increasing our costs. So, the question is, how can we, I think we have to probably eat it at this point. We have all these orders. They're ready to go out. We're a golf company, so really heading into the main golf season. So what can we do? We have to eat it, or we can try to sort of near-shore things, land it in Canada, and then bring them piecemeal just to manage our, our financials.
And these products, where can we find them? In golf clubs? They wouldn't be in any of the presidents, would they?
They're all over, yeah. Actually, former Secretary of State Condoleezza Rice wears our stuff. You can find it all over. Golf is primarily an interesting industry. 62% of our products actually are bought on golf course, on facilities where you go to play. And so we're all over at about 400 different clubs. We've partnered also with Golf Galaxy and PGA Superstore in the past, but it's really primarily a wholesale model. So whatever the consumer sees, the real pain of it is that we have to sort of double mark up, right? Because we really have to supply to these wholesalers, and that's where the real pain comes from. The end consumer sees the worst of it, but since 62% of our business is in this wholesale business, that's where we really have to cover our margin.
So what do you do now? I mean, because now, okay, there's 10...
It's really primarily a wholesale model. So whatever the consumer sees, the real pain of it is that we have to sort of double mark up, right? Because we really have to supply to these wholesalers, and that's where the real pain comes from. The end consumer sees the worst of it, but since 62% of our business is in this wholesale business, that's where we really have to cover our margin.
So what do you do now? I mean, because now, okay, there's 10... Community as well. The 10-year at last check was still over about 4.5%, and there we are at 4.45. So it is calming things down a bit. 4.85 still on the 30s. Before we go to break, check out the shares of the biotech companies as well. Certara and Schrodinger are spiking after the FDA said they'll phase out animal testing and drug development. These companies make the software that supports drug R&D, including using AI to run simulations. That will now be the new way the FDA relies on these trials. Both firms up 15 to 20%. The exchange will be back with more right after this.
Hop on board. We're going for a cruise with some easy listening. Feel the wind in your hair and bounce to the beat of the waves with Yacht Rock Classics from artists like Hall & Oates, Steely Dan, Loggins and Messina, and more. Only smooth sailing ahead with songs that help you get away. Just search Sailing or tell your device to play Sailing on TuneIn.
Your favorite podcasts are a bit like close friends. They get you through long commutes, tough workouts, and more. And TuneIn has your favorite shows right on deck. Whether you love cracking mysteries with true crime pods or catching up on news and sports with daily recap shows, it's all here. Or find some new faves with top shows like The Daily.
This is The Daily. Today, and called Chuck Schumer a loser. Now, he's striking
the stuff you should know.
I'm good. I'm thrilled about this one, man. I love like mysteries, especially like real life mysteries and true crime, although this isn't necessarily crime.
Yeah.
And to run across one that's like
Pod Save America.
Welcome to Pod Save America. I'm John Favreau.
I'm Alyssa Mastromonaco.
I'm John Lovett. I'm Dan Pfeiffer.
Also joining us here tonight, Michigan State Senator Mallory McMorrow.
And more. Hear it here on TuneIn.
Are you looking for a way to listen to your favorite audio on the go? Look no further than the TuneIn app. With TuneIn, you can stay plugged in to what matters most, no matter where your day takes you. Download the TuneIn app now and experience audio like never before.
The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. But are you ready to amp things up even more? Just upgrade to TuneIn Premium for all of our exclusive music channels, completely commercial-free. So you get more of today's hits. More country roads. And everything else. Hear it all here, commercial-free on TuneIn.
Issues keep piling up? It may seem like normal aging, but could be due to a buildup of amyloid plaques in the brain. The sooner you talk to your doctor, the more options you may have. Learn more at amyloid.com.
Why should you trade options rather than stocks? Because they offer higher returns, are cost-effective, and can actually reduce risk. Learn how in our new book. Get a free copy today at itsnotanoption.com. Itsnotanoption.com.
At Franklin Templeton, we're always innovating. A leader in public and private markets, digital assets, and custom tax management, we're helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Buying a car is kind of a big deal. You need to see all the options. See, she knows. Car Gurus gives you the most new and used cars right in your hand, so you know your big deal is the best deal. Car Gurus, the #1 most visited car shopping site.
When your home needs work, where do you go?
Angie.
Angie?
That's where Angie came in.
With Angie, find top-rated pros in your area, plus compare quotes and pricing to help you get all your jobs done well. Find top-rated pros in your area at Angie.com.
It's a new dawn, it's a new day, it's a new life, for me. And I'm
Welcome to the 4 parks of Universal Orlando Resort.
Dow's up almost 700 points right now, and we've got a news alert on GM to get to. Phil LeBeau with that story. Phil, what's happening?
Kelly, General Motors, according to Reuters, has made the decision that it is going to temporarily suspend production of its BrightDrop electric delivery vans, which are made at a plant up in Canada. They are citing, or at least the article, according to Reuters, is citing the reason being slow sales for the electric delivery van. And that's true relative to the Rivian electric delivery vans that are run by Amazon, which more than 1,300 delivered in the first quarter, according to Autodata. General Motors only delivered 101 BrightDrop electric delivery vans. But add in the fact that you've got the tariff issues that are front and center, and General Motors has made the decision that for now it is going to suspend that production and temporarily halt production in Canada. I think about 1,200 jobs are going to be impacted because of this decision from General Motors. By the way, Kelly, we have reached out to General Motors waiting for a statement from the company.
But we are to presume that it wasn't a demand issue, Phil, for electric vans, that it was because of the tariff uncertainty?
Well, slow sales. Whether or not that's demand or if that's the fact. Well, that's what they're citing, according to Reuters. But, I mean, do the comparison here. You delivered 101 BrightDrop electric delivery vans in the first quarter. and Rivian delivered more than 1,300. Clearly, that market with Amazon, and Amazon is an investor in Rivian, which is why they order the Rivian van and they use the Rivian van. The electric delivery market is expected to pick up in the future. But as of right now, BrightDrop is not a major player within that market.
Absolutely great. But those numbers do tell that maybe this is a competitive story more so than a tariff one. We'll see. Phil, thank you. We appreciate it. Phil LeBeau with the latest from GM there. The mega cap tech stocks, meanwhile, they've been caught up in the recent market volatility, down around 19% since the president took office, but up today. All of this despite tech CEOs' efforts to court the president's favor. Deirdre Bosa has more in Tech Check. Deirdre.
Kelly, so tech really flipped the script for Trump 2.0. They played nice. You saw visits to Mar-a-Lago, millions of dollars in donations to Trump's inauguration, hundreds of billions of dollars in American manufacturing projects. Yet they're facing arguably more uncertainty and hostility than they did during the previous administration. For Apple, there's no indication that Tim Cook's playbook will work this time around. The company reportedly airlifting 600 tons of iPhones from India to beat the tariffs. Shares are down 15% since Trump was sworn in. Meta and Alphabet, meanwhile, they stand to lose control of some of their most critical and lucrative businesses. Monday, the FTC's antitrust trial against Meta, that kicks off, which could result in the company divesting Instagram and WhatsApp. Remember, the DOJ, they want Google to sell off its Chrome browser. Then there is AI, the biggest technology shift in at least a generation. Tariffs threaten to raise input costs for data centers. And even if AI spending is reaffirmed, as it has been by the likes of Andy Jassy and Sundar Pichai over the last few days, they're now getting less bang for their CapEx bucks. Raising the question, Kelly, does American tech now risk falling behind just as demand is exploding? And could it hand China the edge? Companies like Huawei, ByteDance, DeepSeek, robotics companies, many of them are moving aggressively to scale AI, and they are backed by state support. So the stakes here, Kelly, they're only rising.
Is it a philosophical difference, or is it too soon to tell?
A philosophical difference the difference is that I think tech thought they were going to get a lot more out of this administration, especially as the Trump administration filled the White House with people from Silicon Valley, like David Sachs, like Mark Andreessen, like Elon Musk. Tech leaders, mega cap CEOs, they played nice, maybe thinking that they'd get some relief, but that is not at all the way it's going. And, the tariff picture makes that crystal clear. And China, looking very opportunistic, may take the chance to really give their own companies a boost.
All right, Deirdre, thanks very much today. We appreciate it. Deirdre Bosa. Check out the Dow one more time, up 721 points on this potential word about the from the FT about the Fed standing by to support markets. We'll have much more as we pick up coverage on the other side of this break. I'll join Dom Chu for Power Lunch right after this.
Your favorite podcasts are a bit like close friends. They get you through long commutes, tough workouts, and more. And TuneIn has your favorite shows right on deck. Whether you love cracking mysteries with true crime pods or catching up on news and sports with daily recap shows, it's all here. Or find some new faves with top shows like The Daily.
This is The Daily. Today, and called Chuck Schumer a loser. Now, he's striking
the stuff you should know.
I'm good. I'm thrilled about this one, man. I love mysteries, especially real life mysteries and true crime, although this isn't necessarily crime.
Yeah.
And to run across one that's
Pod Save America.
Welcome to Pod Save America. I'm John Favreau.
I'm Melissa Mastromonaco.
I'm John Lovett. I'm Dan Pfeiffer.
Also joining us here tonight, Michigan State Senator Mallory McMorrow.
And more. Hear it here on TuneIn.
TuneIn's How To. A brief look at all the special functions and things you might not know we have.
TuneIn is your MVP for everything sports audio. With live sports and a full lineup of podcasts and sports talk shows, you'll get all the sports action you'll ever need. Get updates on your favorite sports teams and alerts when they play. Just follow your favorite teams on TuneIn, and you'll receive notifications. Plus, you'll also get recommendations based on your favorite teams. Start following your team and stay in the loop.
From HR to payroll, ADP designs for the next anything.
Welcome to Power Lunch on this Friday afternoon. Alongside Kelly Evans, I'm Dominic Chu, and there are just 2 hours left in a historic week on Wall Street. Stocks are jumping right now to session highs, as you can see there this afternoon, on reports that Boston Fed President Susan Collins says the Fed is absolutely ready to help stabilize markets. And when you look at the weekly numbers, the S&P and the NASDAQ are still having their best week since November of last year. Kelly, it's pretty amazing right now.
Yeah, 7% on the NASDAQ, 5% on the Dow and the S&P. And, of course, check out the yield on the 10-year. We had lower than expected inflation readings on PPI this morning and a horrible reading on consumer sentiment from the University of Michigan. And those inflation expectations jumped to their highest since 1981. You can see the 10-year yield, though, 4.47. So we're off the session highs. We're still not back anywhere near where we were about a week ago, Tom, when we were below 3.9%. Also seeing gold leaping to another all-time high. Dennis Gartman, by the way, telling me he thinks this move is extended. So watch out. The gold stocks are higher as well. Newmont is up 25% this week.
Well, let's get to Steve Liesman now for more on some of these headlines around the Fed and Susan Collins specifically. Steve, I just thought it went without saying that the Fed would maybe be ready.
It's an interesting question as to whether there is really any new information here. Let's provide the information and debate the newness of it on the back end of that. Susan Collins, the Boston Federal Reserve president, talking to the FT, said the Federal Reserve would absolutely be prepared to deploy its firepower to stabilize financial markets should conditions become disorderly. Here's a quote. She says, the core interest rate tool we use for monetary policy is certainly not the only tool in the toolkit and probably not the best way to address challenges of liquidity or market functioning, she said. She's not seeing liquidity concerns overall. Guys, it's not clear to me that she's adding any new information. I'll tell you why, because we've been talking all morning and then just in the last hour with Kelly about this idea. What distinguishes what's happening right now from other situations, what we've had, is the Fed has a series of standing facilities that are already in place to which the market can turn for liquidity if it needs it. It has a standing repo facility. It has swap lines with several global central banks. There is the discount window, which has always been there. I do not believe that Susan Collins is saying the Fed is ready to go further at this time, only that the Fed is ready to do it because it's prepared. I have a list here of things the Fed might do if it gets to that situation. The Fed has several existing liquidity facilities. It has options to take additional liquidity actions. I think the market might be thinking more along those lines. You could do global coordinated central bank action if other central banks felt like under the circumstances working with us. And then in the last instance is monetary policy, right? And what the Fed wants to have happen is all of those things happen before it has to do anything for monetary policy. It wants to address liquidity with liquidity vehicles and the economy with the interest rate.
Surgically. That's how they want to do it.
That's how
the
they
right tool for the right job. Right. I guess maybe in the past, and certainly in recent memory around potential financial crises, things that have happened in the last 20 years, Steve, there's always been a sense sometimes that when you break out the bazooka, from going back to the great financial crisis days, that you imply or signal that things may be
that there's
worse,
a panzer coming.
Correct, that there's something else behind it or that things are getting bad. Is there a fear right now that if the Fed or any other central bank were to embark on something that is more forceful in nature, that it would be signaling to the market that maybe things aren't as okay as people thought they were?
It is always a danger, and what you've just done, Dom, is underline the beauty of standing facilities. Because the standing facilities exist without the whole pageantry of creating the facility and saying, here it is, we're panicked, we're creating a facility, right? If you have them existing, which is why this is a very technical point, the Fed does repo operations once in the afternoon. There's a lot of guys in the market say, hey guys, do it in the morning too, because people need liquidity overnight. And if you did it and had a standing morning operation, it wouldn't be a panic if you did it in the first instance. The Fed knows about this. They're thinking about it. I don't know what they're going to do with it. But that's the idea, is that you have the facility there. We will learn about the use of the facilities during the Fed's reports. The H4.1 comes out on Wednesday at 4:30. There's another report about custodial holdings on Thursday. We'll learn about it later. We can sometimes learn about it when it happens. But you're right in the sense that we don't need to create these facilities. They exist. It's probably significant that a Fed official is reminding people that the Fed has these abilities. Also significant, and I have been on the phone for I don't know, 10 days now with what I called, with Kelly, the guys with the overalls and the wrenches, the guys in the plumbing of the financial system. They have not seen a need for this now. Not yet. It could be there, but they've not seen it. One guy said to me, we're not the story yet, but we're closer. That was a couple days ago. So we're not seeing that kind of dislocation. It's significant, I guess, that a Fed official is telling them we have these tools. I don't know that they're being needed right now.
The market likes to hear it. It's up 665 right now. Let's see what our next guest thinks. David Zervos is the chief market strategist at Jefferies. So, Dave, you might think all of this is unnecessary, and markets just kind of have to shake themselves out of it. And do you think the events of this week are significant in terms of the falling dollar, rising bond yields, and so forth, or no?
I think they're very significant, Kelly. I mean, this is a highly unusual risk-off period where the dollar weakens and bond yields rise, or at least don't move significantly. They obviously moved a lot lower and then came almost all the way back, so they didn't offset equities like they usually do. But the weaker dollar is a really different phenomenon. In most of the crises where these types of funding facilities would come in that Steve was just talking about, they're almost always in an environment where people are running for the safety of the dollar. And you know what? This is maybe worth thinking about. The only other one that we've seen was in October of 22 with the LDI crisis with the UK, where we've seen the long end have some issues like it's having, largely because the marginal buyer is a leveraged buyer, and there's risks of trade battle-related selling from our trading partners. So I think the facilities aren't 100% set up exactly in the past for a weaker dollar risk-off scenario, which is probably confusing the markets a little and maybe even confusing the Fed and Treasury.
So, David, that's really interesting because I had this weird thought this morning. The swap lines are to borrow dollars when dollars are short.
Absolutely.
And I tried to run through my brain, could the Fed borrow euros? I mean, they are, by the way, bidirectional.
It's
they
like
can go both ways.
We made the LNG export terminals. Or the import terminals. We had to flip around and make them export terminals.
It's same idea. I don't know, David.
So I don't think that would be the way I would think about it. I think the way I would think about it is the currency policy is probably largely going to be set by the administration and the Treasury Department. That's not the Fed's lane. And really, Steve, what I think we're seeing, and what I've been arguing with, speaking to our clients about this past week, is there is a cogent effort to kind of take down the mercantilist trading structures that have been in place for many decades. That's what this last week was about. And part of that involves likely a weakening of the dollar. So I don't know that you want to be changing that. You want to do that in a way that doesn't completely disrupt the bond market or trading partners who have amassed large amounts of dollar securities, which is a difficult needle to thread, no doubt. I don't think we're 100% in that heat of the battle in the trade war where it gets there, but we should have the facilities there to make sure that something like that doesn't happen. And I imagine that has been discussed because it did happen in the UK.
David, I want to establish a couple facts on the ground as you may or may not know them. Is there a shortage of quality collateral? That's the kind of thing that's caused market disruptions before. Is there a dollar shortage? My read is both no, but do you have any inkling at all? Because that changes the game if that's the case.
I don't believe that's the story. There may be desires to raise money and sell, but I really think what we're seeing, Steve, is much more of a reallocation away from U.S. dollar assets as the trading landscape is changed. And the trading landscape is that we're going into a kind of battle a la what we did in 1985 with the Plaza Accord to say, hey, this is imbalanced. We have huge trade imbalances with Western Europe and with Japan. This time it's with China. And part of that involves changing the way the currency is manipulated by our trading partners.
I don't know if this is hyperbole or not, but somebody described this to me as equivalent to Nixon coming off the gold standard.
Okay, so
I don't know if it's that big.
I don't. I mean, let's hope it's not kind of in this kind of realm of things.
Changing the whole trade patterns of the world.
But so that's my point. So that's what I want to talk about, David. This appears as though it is a fundamental, almost paradigm shift in the making with regard to how the markets around the world view U.S. dollars and dollar-denominated assets, specifically treasuries. We're talking about the deepest, most liquid market in the world for credit and rates here in the United States. Yet there is all this talk right now about the luster coming off some of those assets. So all of a sudden we have the dollar index dropping by about 9–10% over the course of the last 2 to 3 months. You have less of a shine for the attractiveness of U.S. Treasury debt. It used to be that when the going gets tough, the tough and everybody else get going to the U.S. dollar and U.S. Treasuries. Is that still the regime we're operating in right now?
So this is not a risk-off scenario where people run to the safety of treasuries or the dollar at this stage. I think treasuries more likely will come around to that if it gets more extreme. But the dollar is a new phenomenon, Dom, and this is really where I think investors have to think about what this particular risk-off scenario is like relative to the ones we're used to in March of 2020 or in 2008, 2009, or even going back to the dot-com crisis where everybody runs for dollars. There is a concerted effort, I believe, to change the global trading landscape, and that is one that has had a weaker renminbi and to some extent a weaker euro or a weaker, hidden Deutschmark, if you will, underneath the euro behind it. And if that's really what we're about to do, which, by the way, I think is a huge home run in the long run for the U.S., the transition is a little messy. The forcing of that trade will be a little messy. But in the end, if you look at what happened, even with the Plaza Accord, you look at what happened in prior trade rebalancings, this is a very positive sign for U.S. growth and U.S. real returns on capital. Stocks go up in that environment, big. And the dollar does weaken, and it's managed weaker. So I don't know if that's exactly where we're at, but I'm sniffing that more as the trade that the market is focusing on. And as we get closer to understanding how this game is going to get played between China and the U.S. and everybody else, we'll be able to make a better assessment.
David, the Collins comments on the one hand can be seen as bullish in that she's saying the Fed has tools, can come in. On the other hand, you could read them as slightly bearish in the sense that we don't want to be cutting rates in response to this. We want to provide liquidity. How do you read it? Does it sound like something that was out there? Was there a reason to do it, or was she just stating what we already know?
Well, I have to say, Stephen, and you watch this as closely as I do, I'm shocked that since last Thursday, with all the dislocations, what happened in the swap market, days that felt like 2008, some even worse with what happened in swap spreads, basis, and all of the other inner plumbing workings of the Treasury market, that we didn't hear anything from senior Fed officials. A little shocking to me. Thankfully, Susan stood up and said something. I'm excited for that. And I do think they're watching. I think the political charge is just so high between the administration and the Fed at the moment that it's just hard to see more cooperative Fed action early to stem this. I do believe it will be there. I think everybody will come together and know that it's for the greater good of our credit markets. I mean, right now we don't want a high yield credit market that's completely shut with no new issues. We don't want an IG market that's shut. We want to make sure these things function and that our businesses can prosper inside of the biggest capital market in the world, the U.S. market for debt. So I think it was great that she stepped up. I think the market needed to hear that. It probably needs to hear a little bit more. It needs to hear a little bit about what this is going to be, Steve. Because as you pointed out, and I think it was really good and instructive that you went through that with listeners earlier, a lot of these facilities are built for strong dollar outcomes, not weaker dollar outcomes. And it'd be nice to hear Fed officials talk a little bit about what do you do when there's a trade imbalancing, rebalancing story that gets a little bit messy in the financial markets. Have they gamed that? Have they run that through their risk management and how they think about different shocks that can hit the system?
I've thought it through, David, and it's very tricky because you could have a situation where the Fed comes in, it is printing money, that depreciates the dollar, which makes the run on the assets even more. So that's a bad loop you could be in, which means the Fed has to very carefully. We have to go, David. I'm sorry to check that last.
I'm just glad
I have so many questions.
I didn't even get to talk to Kelly.
You didn't need to. There was nothing left for me to ask. This was exactly the conversation we needed to have, don't you think? Exactly the one. David, thanks. Really appreciate it. David Zervos joining us today.
All right, after the break, nearly every Mag 7 name is set to snap a multi-week losing streak at this point, but is this just a brief reprieve? These names have been mostly negative over the last 10 weeks or so, so keep that in context. We'll be right back on Power Lunch after this.
Gatorade Zero has all the electrolytes of Gatorade with zero sugar, designed to rehydrate and replenish. For a day with zero excuses and zero reasons not to. Gatorade Zero. Is it in you?
Some people say that TalkSport is possessed by the Premier League, but that's just not cricket. We're also charmed by the Champions League, fanatical about the FA Cup, and rampantly rabid about rugby, Formula One, and boxing. TalkSport's the brashiest, boldest, best soccer and sports opinion anywhere in the known universe. Live from London on TuneIn.
Your favorite podcasts are a bit like close friends. They get you through long commutes, tough workouts, and more. And TuneIn has your favorite shows right on deck. Whether you love cracking mysteries with true crime pods or catching up on news and sports with daily recap shows, it's all here. Or find some new faves with top shows like The Daily.
This is The Daily. Today, and called Chuck Schumer a loser. Now, he's striking
the stuff you should know.
I'm good. I'm thrilled about this one, man. I love like mysteries, especially like real life mysteries and true crime, although this isn't necessarily crime.
Yeah.
And to run across one that's like
Pod Save America.
Welcome to Pod Save America. I'm John Favreau.
I'm Alyssa Mastromonaco.
I'm John Lovett. I'm Dan Pfeiffer.
Also joining us here tonight, Michigan State Senator Mallory McMorrow.
And more. Hear it here on TuneIn.
The Jack FM guarantee. At least one stinker in every bunch of socks. Just search Jack FM on TuneIn to listen.
It's been
Jack FM. Playing what we want.
The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. But are you ready to amp things up even more? Just upgrade to TuneIn Premium for all of our exclusive music channels, completely commercial-free. So you get more of today's hits. More country roads.
Thank God I get to wait.
And everything else. Hear it all here, commercial-free on TuneIn.
Are you looking for a way to listen to your favorite audio on the go? Look no further than the TuneIn app. With TuneIn, you can stay plugged in to what matters most, no matter where your day takes you. Download the TuneIn app now and experience audio like never before.
Welcome back to Power Lunch. It's been a wild week on Wall Street, but will it end with gains? That's what we're seeing right now. The Nasdaq is up nearly 7% over the course of the past week, and Amazon will snap its 9-week losing streak as well. Its last winning week was way back in January. NVIDIA, by the way, is also up 15% this week, but still down 20% this year to date as investors survey the reality of a trade war. Our next guest is looking at which big tech names are the most exposed and which could be and actually hold up better in this kind of environment. Patrick Moorhead is the CEO and chief analyst over at Moor Insights and Strategy, a person we'll talk to about kind of the tech landscape as it's unfolding. And Patrick, I guess the question I have for you is, given everything that we've seen with regard to the damage in certain parts of the technology sector, is there any reason for medium to long-term pessimism? It just seems like this could be a blip on the radar right now.
Yeah, I think there's a great reason. I don't think the full force of the tariffs from China, our tariffs on their goods have completely hit home yet. And we're looking at it from two vectors and really fundamental, right? Increased cost of goods from tariffs and increased CapEx amortization that hit the bottom line, and then a decrease in consumption from higher prices. And the companies that the tariffs have really not been fully factored in are Apple, right? If you truly believe that the price of an Apple good could go up by 150% from a cost basis as it comes across the border, that's catastrophic to a company like this. And then you have companies that make notebooks. All companies who are making notebooks, it's built in China and will get hit with the full weight of that. There are some certain sectors, though, that I think midterm to long term are very good. I think the entire AI trade up and down is a good bet at this point. That is not going to change. You will have continued build outs of hyperscaler data centers and enterprises. And thankfully, most of those goods are covered by USMCA as they are manufactured in Mexico. But if we see some tariffs on semiconductors, literally all bets are off, and you will be seeing a lot of red in all of big tech.
I like the way you put that kind of so binary, Patrick, just to help us all capture this moment. So you say you think you could buy everything in the AI trade right now unless tariffs go on semiconductors and then all bets are off.
That's exactly right. And the reason you're not seeing all the hyperscalers get clobbered is most of their goods are at 0% tariff because their servers are manufactured primarily in Mexico, which is covered under USMCA. But yes, it will be a very big and deep red scenario if semiconductors are tariffed.
Most at risk, you think, could actually be a company like Apple right now. Is that right?
Right now, that's right. Even without a tariff off semiconductors, if you look at the way that their business is structured and how much of their manufacturing they do in China, we're not talking about a short term, hey, I have to make this shoe in a different country. It might take me 6 months to get set up. To significantly move volume from China to, let's say, Vietnam could take 3 to 4 years. It takes 1 million workers in China, which, by the way, Foxconn has to import workers from Malaysia to have enough workers to create those iPhones. It would take years. And the other element of this is it's not just planning a factory. You need the entire supply chain to plant their flags and build their sub-assemblies around that. And that takes years with a product like an iPhone.
So Apple is one of the most at risk, both because of the supply chain, also because if there's recession risk here. Least at risk, Microsoft, we've talked about that. The semis, if you like you said, if they're not tariffed. And then a lot of the SaaS companies you think can kind of skirt this.
That's exactly right. And I keep reminding people that SaaS and software are not tariffed yet. Europe is threatening that they could put a tariff on U.S. services, which again would be adding cost to it. But I think now that we're at least talking with the EU, that's low likelihood. But if you look at the ServiceNow, the SAPs, Oracles, IBM, Netflix, and Zoom, they aren't going to get touched here. And I do like Microsoft a lot. It is the minimal exposure because it has minimal products that it pulls over. It's about 2%. And let's assume all of those are made in China. And they have business services that companies can't turn off, right? You're not going to turn off Microsoft 365. You can't just turn off an application that you've developed to put on top of Microsoft Azure. That's just not going to happen. So it's very durable, even at times like this, in a worst case scenario, that we go into a recession.
All right. Patrick, with the playbook, at least for what we know at, 2:20 Eastern on a Friday. Thanks so much. We appreciate it.
Thank you.
Patrick Moorhead, more insights and strategy. After the break, we'll get you the very latest on bond yields with everything we've had to digest the past few hours. But first, as we head to break, this market's not fun and games, especially when it comes to those companies literally. Mattel hitting a new 52-week low today. Hasbro yesterday, both down significantly since the tariff announcement last Wednesday, even with the pause that's since been announced, but also higher tariffs on China. We'll run through some other key movers in 3-Stock Lunch coming up.
Experience vibrant senior living with award-winning services at Brightview Senior Living Communities. At Brightview, our residents enjoy resort-style amenities, daily programs, exciting social and cultural events, and delicious chef-prepared meals. But that's not all. Brightview residents also enjoy complimentary transportation, safety, security, and high-quality care if needed. Brightview Senior Living Communities. Learn more about the possibilities at brightviewseniorliving.com.
Hey there, it's Stormy Warren, and on my podcast called The Stormy Cast, I talk to artists like Luke Bryan, Tim McGraw, and Miranda Lambert about their journey from their hometowns to their first big break in Nashville. Thomas Rhett called his episode of The Stormy Cast the best therapy session he's ever had. And during my conversation with Little Big Town, we needed tissues, and a lot of them. Yeah, the conversations go that deep. You'll find The Stormy Cast wherever you listen to your favorite podcasts, in the TuneIn app, or at tunein.com.
The TuneIn app is the most convenient way to access all your favorite audio on the go. Download the TuneIn app and stay plugged in wherever your day takes you. With TuneIn, you can listen to the best music, podcasts, talk shows, and sports no matter where you are. Search for TuneIn in the App Store to download the app today.
The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. But are you ready to amp things up even more? Just upgrade to TuneIn Premium for all of our exclusive music channels, completely commercial-free. So you get more of today's hits. More country roads. And everything else. Hear it all here, commercial-free on TuneIn.
Nothing sets the tone for your day like country hits. That's why TuneIn's exclusive Country Roads is here to make your journey just a bit better. With classic, feel-good country songs to bring summer vibes all year long. To top 40 hits you just can't get enough of. TuneIn's Country Roads are your route for the best in country music. Just search Country Roads or ask your device to play Country Roads on TuneIn for a little Southern hospitality now.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Franklin Templeton Custom Tax Management. Easily create custom SMAs with our Canvas platform and help investors keep more of what they earn. Franklin Templeton, your trusted partner for what's ahead.
Overtime's about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to all investors, sophisticated investors, beginning investors. I'm always learning.
Closing bell overtime, 4 Eastern, CNBC.
Welcome back to Power Lunch. There are stocks which are still hanging on to about 1.5% gains this afternoon. We've seen things calm down in the bond market too. Let's talk about whether we can trust that or not with Rick Santelli. He's out in Chicago with the traders. Hi, Rick.
Yes, indeed, Kelly. And very quickly, before we get to Chem, look at a few charts. 2-year Boone versus 2-year U.S., and you can clearly see that European flight to safety seems to be more in their own backyard. And 2-year or higher, 10-year closed at 4% last week. That is a big move, but the flight to safety that caused it to be in the neighborhood of 3 3/4 to 4% to begin with made the move that much more exaggerated. Finally, the dollar index. You see that chart starting in 03? The reason I started 03, from basically 03 to 22, the dollar spent very little time above 100. COVID made the dollar expensive. Okay, I'm done. Chem, how you doing, buddy?
How you doing, Rick?
All right, it's been a wild week, okay? I know you have thoughts on the VIX and its range, but if you had to tell your grandma, your mom, to stay calm or be crazy? Like, how are you looking at this volatility, and what would you tell an investor to take away from this crazy week and a half?
Look, the biggest deal is what's going on with the long end of the curve. The reality is we've been talking for quite some time about a stagflationary environment. Why is that? Populism. If we're going to go out and do protectionism and try and improve median outcomes, which I
like where we're going, but I just want to say that I would look at that as reversing globalism. You could call it populism. patriotism, protectionism, but what we're really doing is trying to disentangle from some of the global
We
tendencies.
can put whatever marketing spin on
but
it
that's
we want.
important.
But the reality
One's
is,
negative and one isn't.
sure, I'm not saying a negative or positive, but if we're going to stop going out and globalizing more and we're going to reverse that trend, right, that is inflationary by definition, because globalization is more efficient, supply chains,
Oh,
everything.
yeah, yeah.
Now,
everyday low prices was because of low labor outside the
now,
U.S.
everyday low prices may not be best, though, for the median person in the U.S. Median outcomes for people in the United States have gotten worse relative in the last 40 years. We've had 1.75%
You had zero interest rates for 10 years. That didn't put a lot of wealth in their pockets.
Well, that was one of the problems. That's what supply side economics is. If you take interest rates to zero, if you globalize, you send money to corporations, what do they do with it, right? They go send it to China and anywhere else. Now,
when you look at the board, you see a 4.5% 10-year. Does that seem outrageous? Like, when you look at that, you go, oh my God, the world's coming to an end. The 10 years at 4.5%.
No, we don't need to be bombastic about this, but the reality is it has gone from 0.5% to 4.5%.
Exactly.
And my view is that it's going to go a lot higher. 8.5%, 10%. Not today, not tomorrow. It will take years. But if you looked at what happened in the 60s and 70s, it was a very similar setup. It was protectionism. It was populism, right? We had the Great Society program. We had global conflict, the Vietnam War.
And we had
All of these
China.
things-
People couldn't even spell China in the 60s and 70s.
But the Cold War and the Vietnam War, these things were a result of more protectionism. So if we're going to go to deglobalization, there is a cost to it. But that might be better for us as a country, right? If we're looking to improve median outcomes, the higher tenure is a cost to doing that. Higher inflation is. And I
What do you
that's
think the chances are that the next year we're going to make a new all-time high in any one of the stock indices? In the next year.
In the next year, if we do it, it will be very short-lived. I think the odds are 10 to 15% personally.
Okay, so you basically think the best days of equities are in the rearview mirror?
Not forever, but for the next year, yes.
Do you think China should have been challenged by any forgetting the politics? Were they in a situation?
Simple answer, yes.
All
yes.
right.
If we care about our people, you know, the America First policy makes sense. We are a country. We care about our people. That said, globalization is more efficient, and it's better for everybody, maybe not the best for us alone.
That's a perfect place to stop. Really. It's best for everybody, but not necessarily for us.
I agree.
I think that sums it up. Dom Chu, back to you, and see, we are friends after the bell rings. Back
Listen,
to you.
we love Chem and we love you, Rick, obviously. So thanks for the conversation. Chem, Rick, have a great weekend, guys. We'll see you again soon for the bond report there. Now, as we head out to a quick break, a power check here. Oil is actually turning positive on the day. The Spider XLE Energy ETF is turning around as well, coming off its lowest levels since October of 2022. Now, it's been a rough go for the group overall. Occidental Petroleum is 48% off of its recent highs. Devon Energy down by 49% from its recent highs. Even oil giant Chevron, 20% below its highs. Power Lunch will be right back after this.
You know that feeling when everything just clicks? That's what shopping at Volkswagen of West Islip feels like. It starts with exceptional service, a welcoming space, clear pricing, and a team that listens. Volkswagen of West Islip offers at-home test drives, express service, and online scheduling because your time matters. Don't miss exclusive finance offers as low as 0% during Volkswagen Deal Days. Visit VWofWestIslip.com now or stop by their showroom on Sunrise Highway today. Volkswagen of West Islip, valuing every customer's needs and working tirelessly to exceed expectations.
Celebrity Jeopardy brings the competition.
I feel incredibly nervous.
I'm killing it out here.
And the comedy. Neil deGrasse Tyson, an astrophysicist. Are either of you astrophysicists?
Astro-schmizicist.
Celebrity Jeopardy. New Wednesdays, 9, 8 Central on ABC.
The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. But are you ready to amp things up even more? Just upgrade to TuneIn Premium for all of our exclusive music channels, completely commercial-free. So you get more of today's hits. More country roads.
Thank God I get to it.
And everything else. Hear it all here, commercial-free on TuneIn.
Nothing sets the tone for your day like country hits. That's why TuneIn's exclusive Country Roads is here to make your journey just a bit better. With classic, feel-good country songs to bring summer vibes all year long.
This guitar about as hard as a cane.
To top 40 hits you just can't get enough of.
Thank God I get to
TuneIn's because country roads are your route for the best in country music. Just search Country Roads or ask your device to play Country Roads on TuneIn for a little Southern hospitality now.
For thoughtful living, Thuma.
Welcome back to Power Lunch. I'm Pippa Stevens with your CNBC News Update. A federal judge refused to block immigration agents from conducting enforcement operations at churches and other places of worship today. The judge said the more than 24 religious groups that sued to block these operations failed to prove any legal harm that would justify a temporary injunction. Prosecutors and defense lawyers say former Abercrombie & Fitch CEO Mike Jeffries is unfit to stand trial. They say he has Alzheimer's disease and Lewy body dementia. Jeffries has been free on bond since pleading not guilty last October to federal sex trafficking and state prostitution charges. Prosecutors say he lured young men for sex in exchange for the false promise to model for his company. And President Trump threw his support today behind a push to adopt permanent daylight savings time and end the changing of the clocks. In a social media post, he called the twice-annual adjustment an inconvenience and a costly event for the government. The president is now calling on Congress to debate the topic. Kelly, back on over to you.
All right, Pippa, thanks. Earnings season is officially underway with some of the big banks reporting before the bell. JP Morgan, whose shares are up 4%, Morgan Stanley both beating on the top and bottom lines. Wells Fargo fractionally in the red, missed on revenue estimates. And with all the uncertainty we're now seeing, our next guest is identifying which financial names more exposed, maybe more vulnerable than others. Joining us now is Commerce Street Capital CEO Dory Wiley. Dory, it's good to have you, and maybe you can position this in how you're thinking about the markets more broadly going into the weekend.
Sure. Thanks, Kelly. Nice to be here. Obviously, the flagship is JP Morgan, and we got a great number out of them. They had a nice beat. They had a one-time extra deal for the First Republic acquisition. Net interest income was up. Investment banking was up 10%. Equity trading up 48%. And the big positive was they were up on loan provisions, which makes the bank safer. One of the things I really haven't talked a lot about is tangible equity in the public markets. I want to bring it up now because I'm very happy where JP Morgan is at a 7.8% number. Just as a reminder, that number was closer to 5% in March of 23 when we had the bank failures. So I think the big banks are looking really good. It's a good trend for all of them, and they're well positioned to move forward.
Is it weird we're talking about how well-positioned the big banks look while also talking about recession risk, awful consumer sentiment, whether the Fed needs to do more to support a falling dollar than a strong one, all of these things that are usually more symptomatic of weak economy and weak financial markets?
Well, as a banking analyst, it's pretty easy to get negative about things, but I'm not sure where all this recession risk is really coming from. Banking is the plumbing and wiring of the economy, and the banking looks really good. Big banks and small banks. Now, we all have this question mark about tariffs and what that's going to do. And the market decides, hey, the tariffs equals inflation equals, problems. And so I'm not sure that I want to buy that. The market seems to remember only one thing with tariffs, and that's Smoot-Hawley. And I think we need to just go back as recent as 2018. Trump puts in 25% tariffs on China. Market adjusts for a little bit, gets a little wacko, and then it's up 31% in 2019. I think we're going to be just fine. China's having obviously a rough reaction here, which tells us a whole lot about the real intentions here versus all the rest of the world.
And Dory, it's Dom. I'm an optimist as well as you know. We've talked over the years a lot. I wonder, in this kind of an environment, where is the opportunity at being optimistic about where the markets are?
There are opportunities. Let's start with data, right? Anytime you hit a VIX of 40, your odds of making money really go up in a 1 to 3 year period. Short time, it's hard to time the market. But if that VIX goes over 40, you buy your favorite stocks. And when you do that, your chances of recovery really go up. Over a year period, your chance of return is a 20 to 70%. I like to think 3 years just to give me a cushion, and 50 to 80% returns are on average. So think 1998. 2000, 2011, 2020, those kind of markets. And so unless there's something fundamentally wrong with the economy or that company, buy your favorite stock. So a perfect example is NVIDIA, right? We've done the analysis. You probably have people on about the effects of tariffs on NVIDIA, and they're less than 5%. Some are saying less than 2%. that stock drops down where it is now and back even down in the 90s, you step up and buy that thing.
All right. Dory Wiley at Commerce Street Capital. Thanks very much for the thoughts. Have a nice weekend, sir.
You too.
All right. Coming up on the show, our trader has 3 names to ride out the tariff uncertainty. 3-stock lunch coming up after this.
Crypto Watch is sponsored by Crypto.com. Crypto.com is America's...
Introducing Instagram teen accounts. A new way to keep your teen safer as they grow. Like making sure they always have their seatbelt on.
All right, sweetie pie, buckle up. Good job.
Or ring the bell on their bike.
Okay, kid, give it a try. Nice.
Or remember their elbow pads.
Knees too, okay? Yep. There you go.
New Instagram teen accounts. Automatic protections for who can contact your teen and the content they can see.
Hi, it's Stormy Warren, and previously on my show, I caught up with Luke Bryan on how Billy Currington helped promote Luke in the early days.
A programmer would go, so Billy Currington told us you wrote good directions, and that would give me a little more time with that programmer and validate who I was as a writer.
Katie Offerman recalled her time at the Berklee School of Music.
Berklee was always kind of known as primarily a guy's school. It was a lot of like jazz guitar players. Not many women would go. When I was there, it was 1 out of 7 was a girl. So still primarily guys.
Yeah. And Tim McGraw talked when he first dove into music.
My freshman summer in college, I bought a guitar. I pawned my high school ring for $25 and bought a guitar at a pawn shop. And spent the summer learning about 50 songs, and then I started playing for tips. And then nothing else mattered after that.
Make sure to listen to the Stormy Warren Show weekdays 7 a.m. to 1 p.m. Central. Just tell your device to play the Big 615 on TuneIn.
The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. But are you ready to amp things up even more? Just upgrade to TuneIn Premium for all of our exclusive music channels, completely commercial-free. So you get more of today's hits, more country roads, and everything else. Hear it all here, commercial-free on TuneIn.
Listeners, unite! TuneIn brings together your music, news, sports, and more. Whether you're music obsessed.
Hey, this is Taylor Swift.
Love to stay in the know with top news.
There are parts of the country that have really not seen
Or what to stay in the game with up-to-the-minute sports coverage.
You can understand how the Atlanta Braves feel about it. There are people who feel that this is taking...
It's all right here on TuneIn. Just sit back and listen.
Your favorite podcasts are a bit like close friends. They get you through long commutes, tough workouts, and more. And TuneIn has your favorite shows right on deck. Whether you love cracking mysteries with true crime pods or catching up on news and sports with daily recap shows, it's all here. Or find some new faves with top shows like The Daily.
This is The Daily. Today, and called Chuck Schumer a loser. Now, he's striking
the stuff you should know.
I'm good. I'm thrilled about this one, man. I love like mysteries, especially like real life mysteries and true crime, although this isn't necessarily crime.
Yeah.
And to run across one that's like
Pod Save America.
Welcome to Pod Save America. I'm John Favreau.
I'm Alyssa Mastromonaco.
I'm John Lovett. I'm Dan Pfeiffer.
Also joining us here tonight, Michigan State Senator Mallory McMorrow.
And more. Hear it here on TuneIn.
To reach those goals, that's ambition.
TuneIn's How To. A brief look at all the special functions and things you might not know we have.
Did you know you can control the speed of what you're listening to? During playback, you can tap on the speed control setting to adjust the speed. Whether you'd like to make it faster to get to the end or take it a bit slower to give it time to digest, you can listen to all your favorite podcasts and audiobooks however you want. Plus, if you follow your favorite podcast and books, you'll get recommendations on what to listen to next. Why not try out this feature today?
There's just something about classic soul music that gets you moving. And TuneIn's exclusive Soul Groove station has all the right moves. Hit play on the grooviest 70s selection. Get your masters in melody with Motown classics. Or just set the right tone with smooth, soulful vibes from Marvin Gaye and more. It's all right here on TuneIn, ready to set the perfect 70s tone. Search Soul Groove or tell your device to play Soul Groove on TuneIn now to listen.
The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. But are you ready to amp things up even more? Just upgrade to TuneIn Premium for all of our exclusive music channels, completely commercial-free. So you get more of today's hits, more country roads, and everything else. Hear it all here, commercial-free on TuneIn. You can stream all the podcasts you already love right on TuneIn. Available on your smartphone, on your tablet, and even on your connected devices. There's so much to explore, like mind-blowing facts about your world.
So they were disallowed from speaking their language.
In-depth conversations with A-list celebrities.
No, I was ready to go. You know, after I wanted to fulfill my contract.
True crime podcasts you just can't stop listening to.
Others escape justice to live and die in infamy. These
Plus the
individuals.
news and sports content you crave in podcast form.
Couldn't run in a straight line very quickly and didn't have much of an arm. His arm is stronger now.
So whether you want to save your go-to shows for later by subscribing and listening offline, or you want to discover a whole slate of new podcasts to be obsessed with, TuneIn is your destination. True crime, sports, lifestyle, culture, news, and so much more. TuneIn is Podcast Central. Hear them all here.
Granger, for the ones who get it done.
Welcome back to Power Lunch. It's time for 3 Stock Lunch. We asked our trader for 3 names that investors should buy right now amid the recent volatility in the markets and tariff turmoil. Let's bring in Matt Maley, Chief Market Strategist over at Miller Tabak. Your first buy is a beaten down one, Chevron. Those shares have fallen 19% just since April 2nd. Matt, why Chevron?
Well, it's interesting, too, because the stock was downgraded today, I know, on the street. But, the stock is getting very, very oversold on a technical basis. And so is crude oil. And I just think that, the stuff that's going on with OPEC has been largely priced in. And I just don't think we're going to get the drill, baby, drill here in the U.S. that the president is hoping for, because it's just not profitable for these companies to do it. And then, of course, I'm a little bit worried about what's going on in Iran, and that issue is not getting the headlines that it usually would get. But I still worry that Israel is going to strike Iran, and if they shut down the Strait of Hormuz, we have problems there. But more importantly, I mean, they've done some great cost cutting this year. I say great. I'm sorry people have had to lose their jobs, but they're cutting costs. The stock trades at 13 times earnings, and they pay a very nice, juicy 5% dividend yield. So it's a stock it's something that will pay you while you wait during all this market volatility.
All right. Another name you think people can pick up is Pfizer, which is down 18% this year, 31% off the recent high. The dividend yield is nearly 8%.
Exactly. And kind of the same type of thing. As you can see, I'm kind of doing some defensive names here because I'm still worried about all this volatility. And I think the market could fall further here. And I don't know that we've actually seen the lows here. But you mentioned it's down 18, 19% this year, down 65% from its highs. Very oversold, and RSI below 19, relative strength index. But, some of their drugs, their heart drug, their cancer drug, doing very well. It continues to do well, or they have continued to do well, I should say, and should do going forward. And not on top of the 8% dividend yield, stock's just trading at 7.3%. So it's a nice cheap stock.
All right, Matt. So we got Chevron, we got Pfizer. The final one is one that you can argue plays offense and defense, and that's Amazon. The stock has actually rallied over the past week, up nearly 8%, and it's snapping a 9-week losing streak. But Amazon's an interesting pick here. Tell us why.
Well, I mean, first of all, there's this concern, of course, about the consumer, and we had another consumer confidence number that was concerning today. However, I think we all know this is much more than just a consumer company. I mean, there's AWS. I mean, the cloud part of the business remains very, very strong. Revenue's going to be up 17% this year. And it's one of these companies, like Palantir is one, but I think this is another one where the return on investment they're going to have on the AI is going to be a lot better than it is for, say, like a Microsoft. The stock is trading at 25 times earnings, which doesn't make it wildly cheap, but it's still cheap, a lot cheaper than it was, and still very reasonable. But I also think I like the idea right now. It's something we did in 2022 during the bear market, is going to stocks like these and buy them once or twice a month, every month for the rest. Every month for the rest of the year. And your average price at the end of the year is going to look really good 3 years from now. And, it's impossible to catch, get the exact bottom on the stock. But this is such a great franchise, such a great company, such a great management. I think you play it like that in a gradual way, you'll do very, very well.
The DCA play, Kelly, dollar cost averaging. Matt Maley with the 3-stock lunch. Thank you very much. And remember, folks, you can actually recap every 3-stock lunch that we have out there anytime you want. Take a moment, check out the QR code on your screen right now. It's up there for all of those CNBC Pro subscribers. Go to cnbc.com/pro for more.
And ahead, CNBC is out with our official list of the most valuable franchises in baseball. If you're sick of the stock and bond markets this week, buy a sports team. We'll reveal the team taking the top spot next.
Introducing Instagram teen accounts. A new way to keep your teen safer as they grow. Like making sure they always have their seatbelt on.
All right, sweetie pie, buckle up. Good job.
Or ring the bell on their bike.
Okay, kid, give it a try. Nice.
Or remember their elbow pads.
Knees too, okay? Yep. There you go.
New Instagram teen accounts. Automatic protections for who can contact your teen and the content they can see.
Hey there, I'm Stormy Warren from the Big 615, and previously on my show, Zach Topp talked about finding his voice.
As a kid, chasing around all this different stuff, trying to sing like Merle on one song, trying to sing like Whitley on another song, eventually found a thing that was just my own, and I guess that's what you need. Nobody wants to hear somebody try and do Merle again because he already did it as good as it could be done.
Make sure to listen to the Stormy Warren Show weekdays, 7 a.m. to 1 p.m. Central. Just tell your device to play the Big 615 right here on TuneIn.
The Jack FM guarantee, at least one stinker in every bunch of socks. Just search Jack FM on TuneIn to listen.
It's been
Jack FM, playing what we want.
Looking for even more of the audio you love? Upgrade to TuneIn Premium to remove ads, like this one, and score more of the content you love. That's more curated news.
If one party is saying we will never raise taxes even on millionaires and billionaires.
More top sports.
And he's gonna go! There's the tying goal!
And everything in between.
This game is over!
Upgrade now for the premium listening experience.
The music you love is all right here on TuneIn, bringing you good vibes and the hottest hits. But are you ready to amp things up even more? Just upgrade to TuneIn Premium for all of our exclusive music channels, completely commercial-free. So you get more of today's hits, more country roads, and everything else. Hear it all here, commercial-free on TuneIn.
Goes further with T-Mobile for Business.
All right, welcome back to Power Lunch. CNBC is out today with our official MLB valuations list, the most valuable teams in Major League Baseball. Taking the top spot this year.
How do you spot the all-new Nissan Rogue Rock Creek? Here's a hint. It's got all-terrain tires, a tubular roof rack you can't miss, and it's tough inside and out with lava red detail. You'll also find it in its natural habitat, climbing mountains, attacking rugged trails, and never backing down from any adventure. The first ever Nissan Rogue Rock Creek.
Intelligent all-wheel drive cannot prevent collisions or provide enhanced traction in all conditions. Always monitor traffic and weather conditions. Always secure cargo. Heavy loading of the vehicle with cargo, especially on the roof, will affect the handling and stability of the vehicle.
Coverage. Visit specializedinsurance.com.
Hey, it's JP for King O'Rourke in Smithtown, Long Island's EV headquarters for everything electric. And you got to see these trucks. The all-new Sierra EV is like a rocket ship with all the bells and whistles. Super Cruise, hands-free, driver assistance technology, you name it, they've got it. King O'Rourke has the largest selection of EVs in all of New York. Stop by for a test drive, and if you need more time to make up your mind, just get qualified for an extended test drive. You'll have it for a few days. Be prepared to be amazed only at King O'Rourke in Smithtown, online at KingO'Rourke.com.
Happy Days, Long Island's most popular recreational dispensary, has the largest selection of premium legal products and those hard-to-find favorites. Conveniently located on Route 109 in Farmingdale, Happy Days Dispensary is open 7 days a week. Stop by for quick, friendly service and chat with our knowledgeable bud tenders. Happy Days Dispensary has it all. Order online at happydaysli.com for express.
with City Football Group and AC Milan, one of the great brands in Europe, with Red Bird. We have partnerships with the Hard Rock Cafe and many, many other companies because the Yankee brand is very substantial. It shows commitment, it shows excellence, and people want to partner with us.
Sometimes I don't think people give the late George Steinbrenner enough credit. He was ahead of the times when you think about what he was doing.
Way ahead.
You know, with the Yes Network, for instance, you know, people always see him on, remember for changing managers and all that sort of stuff. But can you give us a little insight in terms of what he saw in the future and how he helped the Yankees sort of lead the pack on the business side?
He had the best instincts of any businessman I ever saw. He could see the future, and he would take risks where other people wouldn't take risks. And he was the boss in every sense of the word, but he was not afraid to delegate, and he only insisted on having good people around him. You know, Hal Steinbrenner is the same way, and he trusts people who he hired to do the job. And I was very fortunate to be one of those people.
Hey, Randy, it's Dom over here. I just want to say thank you for kind of bringing us the story. It's been over a decade since the first time we chatted. And back then, things were very different for Major League Sports franchises. There wasn't the kind of international expansion and moves towards other sports that we've seen. I wonder if you could tell me a little bit about what you're seeing for Major League Baseball and other Major League sports when it comes to America's position in expanding its pro sports leagues across the world, and whether or not there are headwinds now.
Yeah, thank you. It's a great question. I think it's basically emerging. You saw recently we played games in Tokyo, the Dodgers and the Cubs. It was phenomenally successful. We were in London a few years ago. Hopefully we go back to London very soon. Very, very successful. I think the World Baseball Classic has done a good job in making baseball much more known internationally. We have home run derbies that we take to every city. So I think it's important. I think people get adjusted to the game. The world's becoming a smaller place. So I think it's only going to grow, really going to grow. And down the road, who knows, maybe there'll be a baseball franchise outside of North America.
Randy, it's Kelly. Just to build on that, have you seen any upset in ticket sales because of all the economic uncertainty?
No, we really haven't at all. I think that, we're doing great, or it's very early in the season. This is our second homestand, but I think it'll work out. I have great faith in the president and his strategy. I think he's going to get us where we need to go.
All right. Randy
Today's
Levine.
the first day the torpedo bats go on sale, right? How do we think they're going to do?
I think the torpedo bats are going to do huge. They've been very successful for some of our players, and I think our fans want to be the first to get in on them.
I love it. Michael Ozanian and Randy Levine, I was going to ask about the torpedo bats. Michael, I'm glad you did it as well. Thank you both for joining us here from Yankee Stadium.
Maybe Michael will buy you one and take it back to the studio.
Please, Randy, give Mike a bat for me, a torpedo bat. Thank you very much, guys, for you both.
You got it. Have a good weekend.
Yeah, you too. And by the way, to see how your favorite team stacks up in these franchise valuation rankings, you can check out the full valuations list over at cnbc.com/sport. It's an amazing kind of story, the way that you kind of look at the way things have developed for sports all over the world and just the moves that we've made from a major league franchise.
No, I think your question, though, is appropriate. Like, is there going to be any blowback or not? But the torpedo bats is also so the backstory to that is amazing.
You're a nerd just like I am. I want to see what the physics are behind it.
Not just that, but the fallout now that they're introduced into the league, and how does everybody else adjust? And the MIT guy who helped come up with it.
Well, you know me, I'm focused on the Masters right now.
I know.
Anyway, thanks very much for watching Power Lunch, guys. I hope everyone has a great weekend out there.
We'll send it over to Closing Bell with stocks pretty much near session highs. See you Monday.
All right, welcome to Closing Bell. I'm Scott Wapner, live from Post 9 right here at the New York Stock Exchange. This make or break hour begins with hopes for a breakthrough as the market looks for any bit of good news after this incredibly turbulent trading week. So while we wait for any new developments, whenever they might come, we will show you where things currently stand on Wall Street in this very fast-changing market. The major averages have been all over the map again today, digesting bank earnings and big moves in the bond market once again. In fact, we'll show you an intraday of the S&P versus an intraday of the 10-year Treasury. Bond yields come off the boil, stocks get a little bit of a lift, a few other things going on, which we'll let you know about too. Materials actually the best sector today, gold hitting another new record high. So at least one of those safe haven trades is working again. Tech also doing well, several big names getting a boost. Apple needed it, Nvidia did too. They're among those names in the green today. It does take us to our talk of the tape. Where do we go from here? With all this volatility, where are we going? Let's ask Tom Lee. He is FundStrat's managing partner, head of research, also a CNBC contributor with me here at Post 9. Thank you for being here. So, Liberation Day didn't go as you thought. You apologized publicly for that, which I think a lot of people appreciated. You're always a stand-up person about that. What now? Where are we going?
Well, I think a couple of things that we're thinking about is we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
Are we in a bear market? I mean, we're in a bear market, right? I mean, it almost doesn't matter, textbook whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes, I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that? Or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do?
Yeah, I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50. Or when the percentage of stocks above the 200-day drops to 15, those are almost guarantees of positive 1-year, 3-year, 5-year returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes. I mean, If I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside has largely, it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called, Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in.
Mm-hmm.
There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think's washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
Okay. You used the word draconian. That was your word. But I'm going to play off of that and say, well, what if we're in a post-draconian period where, because of that, we're left with the rubble of that decision-making in the White House? And the damage has been done. CEOs have no visibility whatsoever. Do you see this consumer sentiment number today?
Yeah, they're awful.
Do you see where inflation expectations are?
Yeah, they've gone bananas.
Do you see what earnings expectations have done recently?
I mean, there's no ability to make guidance.
So what if the damage is already done now?
That's right. Now, we have to keep in mind this has been 10 days. So it is a shock, a high amplitude shock, but only of 7 days. So someone can restart the patient's heartbeat. I think that the White House is now keenly aware that Main Street can't handle a huge deleveraging because it is going to lead to job loss, and he's listening to CEOs. So I think there's a really big window to repair the bulk of this damage. And at the other side of this, of course, is that we have reciprocal tariffs in place that are acceptable. We have tax policy that's changing and less regulation. So I actually think the 2026 outlook is still quite good.
Which puts are you, so to speak, more reliant on now? A Fed one or a Trump one?
Well, I think there's a call at work and a couple of puts. I think that there is a Fed liquidity put that was in evidence today by the Fed.
When Collins said what she did?
Exactly. And we know the Fed put on rates strikes much lower. The White House has a policy put because we know that you can't brinksmanship the global economy to a halt just to try to get China to blink. And I think that the call is, I think there's a negotiator call, which means I think the White House exercised the Navarro call and replaced him with Bessent.
And you think that's a meaningful switch, certainly for the markets?
For our clients, is a huge switch because our clients were very worried that there was an incomprehensible level of reciprocal tariffs announced based on what they thought was flawed methodology. That was terrifying to them. So to see a different person negotiating these reciprocal deals is a huge boost of confidence.
Okay, so you stay with us for a moment. Let's bring in our senior economics correspondent, Steve Leisman, for more on what's been happening in the bond market and what Susan Collins said today. She, of course, is the Boston Fed president, in which she said the Fed would, quote, absolutely be prepared, end quote, to help stabilize the market if needed. Well, Steve, obviously one can say, well, of course, and they are ready because they already have facilities prepared like they always do to deal with it. However, hearing somebody of that stature say that they're watching and they're at the ready and they'll do what they have to do if in fact they have to do it is all you need sometimes in a market that is hanging for any bit of decent news.
Well, it's only dangerous, Scott, if people think it means the Fed is imminently going to do something. I think it's important to know that what she said is probably true. Susan Collins, the Boston Fed president, does not speak for the Federal Reserve. I think that's important. And I think if you asked her, she would say she doesn't speak for the Federal Reserve. These would be decisions that would be made by the chair in consultation probably with the New York Fed if he were in a position, and Susan Collins said we were not, where liquidity was needed. So I don't want to throw any cold water on what's happening here, but I would suggest there is no evaluation by the Federal Reserve at this time that we're in a place where something extraordinary is needed from the Federal Reserve. All of my contacts in the liquidity world suggest that we are not in a position of needing extraordinary liquidity from the Federal Reserve. My knowledge of what I think the Fed thinks is the same, that we're not in an extraordinary position. There are episodic issues out there. There's certainly going to be firm level issues that are out there. But it has been pretty remarkable, Scott, that we have not had that situation. As you know, and I think you do too, Scott, you work the phones to try to find the people who are inside the plumbing of the system, and they're not sending out any distress signals at this time. And maybe one of the reasons is because the Fed has these standing liquidity facilities, which makes this different from other times we've been through these sorts of adjustments, which is if you know that not only you can get liquidity, but your counterparty can get liquidity, it changes the level of panic. So it may be that where there's less panic out there than there otherwise would be, given the adjustment that we're seeing in the bond market and in the dollar market, because of the existence of these facilities and the knowledge the Fed could come in. I think Susan Collins spoke the truth that the Fed could come in if it was needed, but I don't think that her comment should be taken as seeing that there is any possibility of the Fed coming in with anything imminently here, because there just is no evidence it's needed.
I didn't take it as such.
No, I'm leaning against that possible interpretation by the market.
Yeah, no, I'm not necessarily sure that was the market's way of thinking about it either. It's maybe just merely a reassurance, just to know that the Fed's not asleep at the wheel. And they can be criticized at times in the past for maybe not seeing the obvious when it was right in front of them, and then having to react to something that was maybe made a little more difficult. But we'll see. Just to hear somebody from the Fed today come out and say, hey, we know what's going on, we see it, we're paying attention to it, and if we have to do something, we'll do it.
I think that's right. I think that's important, and I think you characterized it correctly. It's also well to remember, Scott, in this post-2019 world, post-pandemic world, and then also post-SVB world, I do think the Fed has its ear to multiple parts of the ground in the markets in ways that it perhaps did not before those particular crises that I mentioned. We know that there's a robust desk at the New York Fed that is watching and listening and talking to market participants. We know that the Treasury has an operation like that as well that I don't know specifically, but I assume that they're staffed up watching and listening. The bank supervisors ostensibly, some of them blew it in the SVB thing, and that will not be repeated. There may be something new that they haven't thought of yet, but it's a different world, Scott, especially if you think about the post-Dodd-Frank world where these banks look to be far more well capitalized. Now, there was an interesting comment from Jamie Dimon about relaxing certain regulatory requirements so the banks could play a bigger role in treasuries. But let me make one important distinction here. The Fed will ease the transition to a new equilibrium when it comes to whatever that new equilibrium is for the yield on bonds or the value of the dollar or the value of stocks. It will not stop that equilibrium change.
All right, Steve, good stuff. Thank you very much. Steve Leisman, you've helped us a lot this week in really fast-moving situations, so we appreciate you very much for that. Steve Leisman, our senior economics correspondent. Now let's bring in Chris Harvey of Wells Fargo Securities and Kevin Gordon of Charles Schwab. Tom Lee, as you all see in our wide shot here, is still with us. Mr. Harvey. All right. All right. So much has happened in such a short period of time. Yeah. I can't even remember the last time we spoke, whether you still have your 7,007 target on the S&P in place.
We do. And what we've been saying is, listen, we still think the second half is going to be strong. We think the Fed's going to be cutting rates. We think we're going to look through a bunch of things. We think we'll be talking more positively about trade and tariff. The other thing is, this slowdown is driven by an exogenous shock, not because balance sheets are upside down and backwards. You can get through that. Are we too high? Maybe. We'll look at numbers this quarter and we'll figure it out, but we still are pretty positive on the second half of this year, and we do think we put in a bottom.
So if I hear you right, you're still looking for ways in which your high target can be correct rather than looking for ways to try and take it down because you think you might have to.
That's right. That's right. And I think there are plenty of reasons for that, right? What did we see on Wednesday? Up 10%. Who would have told you we were going to be up 10%? What if the Fed is cutting by 3 times by the end of the year? What if what all this is a repricing of risk? You talked about a bear market before. One of the things that's different from us, and one of the things that's changed, we've talked about low vol, low vol, low vol. It's worked really well, but now we're seeing the tech AI trading at a market multiple, sometimes a little bit of a premium, a little bit of a discount. That is a great secular story. That is U.S.-centric. That has been repriced, no longer the consensus trade, and that's a great long-term opportunity, and that's where you should be putting your attention.
But if they're cutting 3 times, doesn't that mean they're cutting into something that's gotten worse?
So before you said inflation expectations are going up, if you look at, this will get a little bit wonky, but if you look at break-evens on 5 years and 10 years, where you see break-evens are at 2, 2.25. Where does the Fed want them? 2, 2.25. The other thing is you're seeing real rates go higher. As real rates go higher, that's more restrictive. That forces the Fed to rethink what they're doing. So what's interesting about break-evens, too, is break-evens are actually saying either we're going to a recession longer term or the tariffs aren't a long-term issue. And I think it's the latter, not the former.
I'm curious as to what volumes, I don't expect you to have this information off the top of your head, obviously. I'm curious as to what volumes were on the Schwab website, people logging into their accounts and seeing what in the world was going on if they had the wherewithal to actually look.
Yeah, well, the easy answer is high. Volumes were high, no surprise. But I mean, even on a day like today, it's been actually more on the fixed income side, less on the equity side, where some of the, concern is a strong word, but I think just questions about why yields have been picking up, even when we got 2 prints for inflation this week that were negative in month-over-month terms. So that aside, though, a lot of the consternation, I was with clients this week on the West Coast, talking about more of these secular themes that may be shifting. And I think one of the difficulties about the sell-off that's happened already, but also trying to gauge where we go from here is that, this is effectively a man-made shock, not something that we really have a history book to use. So I think that if you just look at that alone and you're starting to weave in something like the Fed, our view is that if it's not an interest rate problem, it's probably not an interest rate solution. So I have very little conviction or very low conviction that even if the Fed were to step in with an emergency rate cut or more cuts that have been priced in, that would be some sort of elixir for what ultimately ails the economy, if there is something that does ail the economy in the end. And I think the sort of rapid nature of tariff policy itself, on again, off again, maybe a delay, maybe we'll get to some sort of deal with X country. That's really, I think, what ultimately leads to a slowdown in the economy. It doesn't have to be some drastic recession, but, you were sort of alluding to it earlier, if this economic momentum to the downside takes on a life of its own, and if companies are ultimately just going to say, hey, if we don't know the rules of the game, we're not going to play, I think that is sort of kind of isolates itself and starts to sort of feed on itself. But it doesn't have to be drastic.
It takes some level of guts, though, to stick to your guns the way you are and try and build a case. I know you're not stubborn, but to try and build a case to where you actually think we could get to.
Okay, so we wrote a note today. What did we learn? We weren't sure whether the tariffs were revenue generation, whether negotiating ploy, if they were something else. What we know today, or we think we know today, they're a negotiation tool.
You think so?
Oh, yeah.
You think you have that clarity?
I think so. I think so. I think what Trump did is he said, I'm willing to take the economy into a recession. I'm willing to sink the stock market. That's how far I'm willing to go, right? At first, we thought we were losing leverage, but then we thought, now that he stepped away, he's realized he's shown people what he's willing to do. They need to come to the table. They will come to the table, and we will get some sort of deals done over the next couple months and in the first half of this year. With China, China's a tough nut, and I don't see either one really breaking on that one. But with our allies, I do see progress, and the most important thing for me is progress, and we're beginning to see that, and I think there is hope that we will make progress in the next 90 days.
I guess I take a bit of a different view if you were just to look at what was announced last week. I mean, the reciprocal tariff chart itself was based on, I mean, we all know this, but based on trade deficits. And I think if you look at the language from the president himself, he still talks about the desire to close trade deficits. So if the desire is still that, if that's the end goal, I think that is probably a more net negative bearish outcome because it's a tough thing to do. It's virtually impossible with every country listed on the chart itself.
But I think you are making an assumption that you know what the White House defines as victory, because they could define victory as something that we don't know, and how it's titrated really makes a difference. Because I think Chris Harvey could be right. If it ends up being pretty acceptable to markets and it's a better deal for the U.S., I mean, people are going to look at 2026 and put a higher multiple on that.
Yeah, I think the ultimate question would be, though, what are the metrics of success? We don't know because they haven't outlined them. And then also, if the metrics of success, if you define some sort of concession or some sort of lowering of a tariff rate as a victory, but tariffs stay on because there still is this desire to close the trade deficit with all of these countries, that to me would still be net negative, because the move to that kind of world where you're trying to totally shift how we do trade, that's a very long-term process, and it takes much longer than just 3.5 years.
Good point you make. To which I turn back to you. Right. Even if you have rollback of some of the picked out of the sky numbers from the board, if you still have tariffs of any kind on for the duration of the year minimum, does that hurt your case or no?
If we're making progress, that's a real positive. And so one of the things that we've been talking about is deficits, right? What we're going to play with, and what's liquid natural gas is one of the things that's going to come up time and time again. What's going to come up is ag. What is going to come up is armaments. And this is how we're going to start to close that gap on trade. Again, if we make progress, right, the first time, whether it comes from Japan or South Korea or Vietnam, we'll have the template. When we have that template, now we can take that template, we can move forward. One of the things that I also think is going to be involved in that template is that our partners might be forced to put tariffs on China as well, because we see China, or the administration sees China, as the existential threat, and they've been circumventing these things. We need to stop that. And so when we talk about what the goals are, I think the goals are lower oil, lower rates, putting China in a box, and having fair trade or balanced trade in North America, between the EU and parts of Asia. And then we can move forward from there.
But when you got the number of 145% on China, your reaction was what?
They don't want to do business with China. They want to put as much pressure on China as they will. They know that Xi will not bend, and that's really the purpose. We want to slow down their economy as fast as possible.
Yeah, but if you try and slow down their economy, you're hurting our economy at the same time.
No doubt about it.
We need more stuff from them than they need from us.
It's not so, but if you're making progress elsewhere, that's a good thing. Eventually, what I think is we'll get to some reasonable middle level, but the point is you want to put as much pressure on them as possible, because it has to be extreme, right? They will not. They're in a position where they've dug in, we've dug in, and it's got to be a lot of pressure. And what we're going to do is we're going to release that pressure by doing, or what I think we're going to do is we're going to release that pressure by doing deals with other parts of Asia, across North America, and in the EU. And what we want to do is we want to put China, or what I think they want to do is they want to put China in a box, which creates more pressure.
What do you guys think of Tom's idea of when I say, well, what do you want to, when I said, you want to buy? Yeah, I want to buy. I said, what? He said, mega caps. Those are like the biggest question in the market right now, no?
Yeah, huge question. I mean, I think that if you were to look at, if you were sort of narrative agnostic and you were to just look at what the charts say, more on the sentiment side of things, as we're big watchers of sentiment. I mean, virtually every metric we look at has been completely washed out. A lot of them touching kind of the December 2018 lows or all-time lows. So looking at that alone, you could look at forward returns from there and say, yeah, things are pretty, the ground looks pretty set for any kind of durable bounce. And I think that's why you have days like Wednesday where the market is this coiled spring. Moving forward, though, and I think coming back to the idea that this is an environment that is really unlike any other in market history, if you are going into recession and if you're starting to, see the market price that, you're probably, you probably still have, I think, more room to the downside. But that's the ultimate unknown, because probably not until the summer is when you see the connection, if the connection still stands between the soft data and the hard data, whether higher inflation expectations are going to lead to consumers pulling back on spending, or if they're able to still, enjoy a relatively resilient labor market and that doesn't affect anything, then we could probably definitively say there's not as much of a connection, not as much to worry about. But, because of how fast moving this is as well, it's going to take some time, I think, to figure it out.
Some of the interesting action today is around the financials, which, obviously reported this morning. The numbers were by and large good. The commentary was not. Most people said, I think, who cares about the numbers? It's all about the commentary. But these stocks like JP Morgan are clearly helping the overall market because JPM is up almost 5%. Leslie Picker follows the space and follows that money. The stocks are acting good, even in the face, as you heard yourself, of commentary that was as cautious as we expected.
You're exactly right, Scott. Investors paying little attention to the numbers themselves, instead focusing on the repercussions of everything that's going on in the macro markets and policy front. As you can imagine, those types of questions truly dominated the conference calls today. Broadly, the executive said consumers and credit trends are actually holding up fine for now. Commercial clients, on the other hand, have paused big transactions and investment, and no one was really willing to make any predictions about the yield curve and what it will mean for loan-making profitability. As for macro commentary, Wells Fargo CEO Charlie Scharf saying they expect, quote, continued volatility and uncertainty and are prepared for a slower economic environment in 2025. JP Morgan CEO Jamie Dimon reiterating his shareholder letter from earlier this week and saying the economy is facing considerable turbulence. Morgan Stanley CEO Ted Pick saying, quote, economists are telling us the risk of recession has materially increased, but the consensus today is softer, not negative growth. And BlackRock's Larry Fink saying that, quote, uncertainty and anxiety about the future of markets and the economy are dominating client conversations. Next week, we'll hear from Goldman Sachs on Monday, Bank of America and Citigroup on Tuesday. Scott, but your